Right, on to the next area, the Global Reporting Initiative. And this, again, is a set of principles. And the idea here is the Global Reporting Initiative is trying to encourage organisations to communicate with all of their stakeholders in an open and transparent way. You'll notice there's loads of overlap between this and the capitals. So, principles that are within this initiative. You should report on anything that's material, both by size and nature. And what I mean by that is anything that's big enough for a user of these accounts to care about. That's material by size. So if you're a large listed company, reporting something that's 1p or £1 isn't really very relevant. But if something's hundreds of thousands, then you definitely want to talk about it. But material by nature means that even if it's small, there will be some stakeholders who really care about it. So, for example, how long you're taking to pay your small suppliers is something that certain stakeholders will find really important, even if it's not that big. Or director pay. Most stakeholders will care about how much directors are paying themselves and how they're paying themselves. So, for example, in shares or cash or what have you. So even though it might not be big enough on its own right to be reported, it's material by nature. Next, stakeholder inclusiveness and understandability. What they mean by that principle is that you shouldn't be writing your financial statements in really complicated language. You shouldn't have to be a financial expert to be able to understand them. A reasonably informed person should be able to understand everything that's in your accounts. Completeness, the whole truth. So you can't just cherry pick and include the things in your non-financial reporting that paint you in a positive light. You need to talk about everything that's been going on, even if it isn't that particularly positive for you as a business. For example, Volkswagen, after the emissions scandal, they couldn't stop talking about their impact on the environment in their financial reports. They would need, and they did, talk about the impact of this particular issue on the emissions of their cars. Sustainability over the long term. So in your financial reporting and non-financial reporting, you should be considering how your business is operating in a way that is going to allow it to be around for the long term, rather than just the kind of short-term day-to-day financial numbers. An example of that, and link back in with the capitals, is around that relationship with suppliers. So are you paying them in a reasonable amount of time? Because if you're not, it's not particularly sustainable because they might not survive. And environmental, so you can see the clear link there with natural capital, can't you, within the capitals? And social reporting, what they're getting at here is things like the amount of time that your employees are spending on CSR activities, any donations that you're making to charity, for example. But again, there's a real overlap there, isn't there, with the capitals, with social and relationship capital. Let's now summarise what we've gone over in this recording. So we went through the 6 capitals, which you need to know a definition of and an understanding of how they work. So financial, intellectual, natural, etc. And we had a look at a question to see how it comes up. And then we went over those global reporting initiative principles, things like materiality and social impact. That concludes this recording.